All right, so LLC laws, they vary from state to state, right? Now, the principal features of LLC laws concern nine primary issues. Number one, formation. Number two, purposes for which LLCs may be formed. Number three, membership interests. Number four, duration of LLCs. Number five, management. Number six, rights of members. Number seven, limited liability. Number eight, restrictions on transfer. Number nine, withdrawal of members. Okay. So in 1995, the National Conference of Commissioners on Uniform State Law enacted a model statute for LLC state laws. The model statute is called the Uniform Limited Liability Company Act, also known as ULLCA, which is the acronym. The 2011 and 2013 amendments to the ULLCA, enacted as part of the Harmonization of Business Entity Acts project, updated and harmonized the language in the Act with similar provisions in other uniform and model unincorporated entity acts. Okay, so on July 19, 2017, the Uniform Law Commission approved the Uniform Limited Liability Company Protected Series Act at this annual meeting. Now, I'm going to discuss series LLCs in another video. They're a whole nother magical creation, a whole nother beauty. So we're going to save that for a separate video. Okay. Now, I'm going to dive right in. We're going to touch on those nine primary issues or concerns, and I'm going to start with the formation of LLCs. Now, the LLC is an organization that's separate and apart from its owners. It can sue and be sued. It can sign contracts, buy property, and take other action in its own name. Okay. Now, the founders of the LLC must file articles of organization with the Secretary of State or other designated government agencies. The articles of organization contain information similar to articles of incorporation for corporations. Most states require the articles of organization to include the name of the LLC, the period of duration, the purpose of the LLC, and the name and address of the registered agent. Now, in other states, they require provisions in the articles of organization dealing with the following issues: membership interests, the right to admit additional members, the names and addresses of the members or designated managers, whether the LLC will have separate series. Now, in addition to the articles of organization, there's usually an operating agreement. The operating agreement, it governs the rights, duties, and obligations of members and managers, except as otherwise stated in the articles of organization or required by state law. Now, the operating agreement is similar to corporate bylaws or a partnership agreement. The operating agreement, it can be verbal or in writing. Okay. Now, the members of an LLC can be individuals, corporations, partnerships, other LLCs, trusts, estates, and associations. There are no restrictions on membership except as provided in the organization documents. Now, your company name, right? Your company name ordinarily must contain limited liability company, limited company, or LLC at the end of the name. All right, the name, it cannot conflict with any other registered names. So you have to be sure to do your due diligence when setting up the company, doing the name search in your state, and all of that. Okay. Now, the purposes for which LLCs can be formed generally, all right, for any lawful purpose. Okay. So, it's going to be subject to certain restrictions in some states. So, for example, some states provide that an LLC may not engage in the following activities: operating a homestead or building and loan association, engaging in the banking, insurance, or trust company business. Now, in Pennsylvania, they enacted legislation effective in 2014 permitting an LLC to be formed for banking and for operating a HMO or health maintenance organization. All right. So also a few more activities where the LLCs cannot engage in: engaging in a profession, engaging in any other business or activities to the extent limited by the articles of organization. All right, so an LLC can also be formed for charitable purposes. Okay, now the main types of charitable LLCs are a low profit LLC, which is also known as an L3C, a tax exempt Section 501c3 LLC, all right, a subsidiary LLC that's wholly owned by a tax exempt organization, and a joint venture LLC between a tax exempt organization and a for profit LLC. Now, I'm going to discuss those also in a whole different video. All right. So cooperative housing corporations, that's where tenant shareholders may contribute their shares in a cooperative housing corporation to an LLC in exchange for membership interests on a tax-free basis. Now, a cooperative housing corporation, it can transfer shares of stock in commercial units in residential and commercial buildings to an LLC and distribute the membership interest in the LLC to its shareholders on a tax-free basis. Okay. Now, a tenant stockholder in a cooperative housing corporation may deduct interest and taxes paid or accrued by a cooperative housing corporation during the tax year. The amount of the deduction is equal to the tenant stockholder's proportionate share of the taxes and interest. So, in order to qualify for this favorable tax treatment, the cooperative housing corporation must meet various requirements. One of the requirements is that 80% or more of the gross income of the co-op's housing corporation for the tax year must be received from tenant stockholders. All right, so the tenant stockholders may contribute some of their shares to an LLC. Income that the cooperative housing corporation receives from the LLC in its capacity as a tenant shareholder qualifies as income derived from the tenant shareholders for the purposes of the 80% rule. Now, the LLC must be classified as a partnership for federal income tax purposes. All of the stock in the LLC must be freely transferable and not stapled to any stock in the cooperative housing corporation. Okay. Now I'm going to touch on professional organizations. All right. Most states permit an LLC to engage in a profession subject to certain conditions. For example, some states provide that an LLC does not protect members from professional malpractice. Other states permit professional LLCs if the LLC obtains malpractice insurance, complies with additional provisions governing professional LLCs, or complies with the separate laws regulating the profession. Now, in California, they prohibit an LLC from engaging in any type of profession. All right. So let's talk about state and governmental organizations real quick. So a state or other governmental organizations may form an investment LLC. Memberships must be limited to a state, a political subdivision of a state, or another entity that may exclude its income under Code Section 115.1 of the code, of the IRS code. The gross income from the LLC allocable to the members qualifies for the exclusion under Code Section 115.1. All right. So LLCs can also be formed for non-business purposes. Some of the states allow LLCs to be formed for non-business purposes. For example, an LLC can be formed in Alabama to hold title for estate planning purposes and for the purposes other than carrying on a business. All right. So, you just have to do your due diligence in your state. Man, there are many, many things that you could set up an LLC for. And this is a very magical tool. So hopefully you guys will always continue to follow my videos. I'm going to get them out. I'm going to put them out. Make sure you follow, subscribe to Ernest Banks. Also, Pickup Game University, my YouTube page. Be sure to subscribe there. Ernest Banks on Facebook, Pickup Game University on Facebook, Pickup Game University on Instagram. Just follow. So let's tap into membership interests, which is another important part of the LLC. Members may contain property, or members may contribute property, services, or almost anything else of value to the LLC in exchange for membership interests. Now, some states prohibit issuance of membership interests in exchange for services or promissory notes. Again, you have to do your due diligence in the state that you're forming your LLC. All right, membership interests may be treated as securities subject to state registration or notification requirements, particularly if members are passive investors. Most states permit division of membership interests into different classes or groups. Excuse me. All right, so another important aspect of the LLCs are duration of LLCs. How long will they be in existence? So unlike corporations, LLCs are in most states of limited duration. Upon termination and dissolution, the LLC must pay its creditors, distribute its remaining assets to members, and make a filing with the Secretary of State or other designated government agency. An LLC typically terminates and dissolves after a fixed period by the consent of the members, upon withdrawal of one or more members, or by involuntary dissolution. Now, let's talk about that fixed period for a moment. All right. So, a LLC can terminate after the expiration of the period fixed in the Articles of Organization or by statute. An LLC may also be terminated in most states upon the happening of other events specified in the Articles of Organization or operating agreement. All right, so you can set the tone for how long your company is going to be in existence. You dictate and determine that, and you make that known in your company agreement. Okay, so there are many, many other reasons and ways for LLCs to be dissolved. And another one of those is by consent. An LLC can dissolve by consent of the members. In some states, the consent must be unanimous. In other states, the consent must be by a majority in interest. Okay. Withdrawal of a member. An LLC normally dissolves at the death, retirement, resignation, expulsion, or bankruptcy of a member unless the remaining members agree to continue the LLC. The consent to continue the LLC is made by a majority in interest, by unanimous consent, or as otherwise provided in the LLC agreements. Now, some states also permit members to pre-approve continuation at the loss of a member. Now, such a statute typically provides that the LLC may be continued at the loss of a member by unanimous consent of the members or under a right to continue stated in the Articles of Organization of the LLC. Okay. Another way is involuntary dissolution, right? Now, involuntary dissolution, that's where an LLC can be terminated involuntarily. Okay. And most states allow this. All right. Now, it's for various reasons. There are different grounds for involuntary dissolution. Some of those are failing to pay minimum franchise taxes. Okay, so a lot of states you have to pay a franchise tax yearly. If you don't pay that tax, they can terminate your LLC. Okay, failing to maintain a registered agent, obtaining a certificate of organization through fraud, abusing the LLC's authority or powers, carrying out illegal activities within the LLC. Undergoing judicial dissolution is where it is no longer practical for the LLC to carry on its business in accordance with its operating agreement. Man, I need me some water. Hold 1 second. My throat has been pretty scratchy. Okay. So another important aspect is the management of the LLC. Now, the members of an LLC may participate in management without personal liability. Typically, the members designate one or more managers to handle day-to-day operations. The manager is not liable for LLC debts or obligations by virtue of that position. The manager's functions are similar to those of a general partner or president of a corporation. Now, management may be vested in designated managers and all of the members or as otherwise provided in the LLC agreements. Some states require LLCs to designate members, so be sure to check out your state laws regarding that. All right. 3 states provide for management by governors and a board of governors rather than managers. All right. Members have rights. Okay. Another important aspect, the rights of members. LLC statutes give members various rights, and those rights typically include the right to inspect certain LLC records, such as the articles of organization, operating agreement, names and addresses of other members, tax returns, and other relevant records. All right. So just, if you have a partner, if you have a business partner, just beware of those rights. Those rights should be listed within the operating agreement. Again, the operating agreement is your living and breathing document. It is the life of your business. So make sure that that is curated and crafted very carefully to your liking as to how you really, really, really want to manage your business. Okay. All right. Another important aspect, limited liability. Okay. Members of an LLC have limited liability similar to that of shareholders in a corporation. They're not liable for the tort liabilities, debts, and other obligations of the LLC. Now, this is a really, really tricky one, especially with a lot of single member LLCs, because you have to really have all of your I's dotted and your T's crossed to really, really be able to take advantage of limited liability that the LLC offers. And that means having your company totally separate from the jump. All right. You have to have if you get money out of the LLC, if you pay a bill for the company, there are certain things that you have to do, and you have to have all of this documented. You cannot operate the LLC as if you are the company. And what I mean by that is the IRS has what's called the alter ego doctrine. I'm kind of going off course here for a minute, but that's okay. The alter ego doctrine. And that's where, sole member LLCs um, really just manage it just like it's them themselves, kind of like they operate in the company from their own bank account. They pay the bills with their personal credit cards. You might have your company phone in your personal name. You're commingling with the company. So the alter ego doctrine basically says is that you operate in the company bogusly. You're not, it's not separate from you. It's just another fancy version of you. Right. So you cannot manage your company that way. And if you manage your company that way, even in the slightest bit, they can come back and they can pierce your veil. And we'll talk about piercing the veil later. But just know that limited liability, there is a very, very fine line. All right, you basically, not basically, you have to follow all of the rules of a corporation in order to be able to um, ensure that your veil does not get pierced. And that means you have to follow those stringent requirements that a lot of people run from when setting up corporations. But you can do it solo. So when they say you have to have a board meeting, simply have a board meeting with yourself. You're able to play every single position that the company would hold, and you can have the board meeting by yourself. You take minutes, you keep up with all of your records, you do all of those things, but you have to follow those formalities in order to ensure that your veil is not pierced. Okay. All right, let's keep it moving. Okay. So where was I? All right. So the agents and managers of an LLC are also not personally liable for LLC debts and obligations. However, certain states provide that members may be liable for the following: debts personally guaranteed by the member, right? So let's say you go out and I don't know, let's say you apply for a company credit card and they tell you, oh, well, we'll give it to you, but you just have to personally guarantee it. Then you'll be responsible for that. I mean, it's just that simple. All states permit members to guarantee or to agree to be personally liable for the LLC debts. Wrongful acts committed by the member. Okay, that's another one. All right, that's another one of those, you know, um, um, one of those issues, right? So, amounts that the member promised to contribute to the LLC. A member may be relieved of an obligation to contribute if all other members consent. However, the member may still be liable to creditors. For example, a member in certain states is liable to creditors who relied on the promised contribution in extending credit to the LLC. In Nevada, members are liable to creditors who extend credit after the articles of organization are filed. Amounts treated as wrongful distributions under state law. Now, these distributions include distributions while the LLC is insolvent. Members and managers are liable for a specified number of years after the wrongful distribution. All right, sales tax not remitted. The trust fund portion of employment taxes are not paid, or any other tax liabilities of the LLC. Okay. Now, remember, let's see here. All right. So the list of these items that I'm reading are where certain states provide that members may be liable. Okay. So sales taxes not remitted, members may be liable for that. And let me just do a brief recap. Okay. So again, sales members may be liable for wrongful acts committed by the member, amounts that the member promised to contribute to the LLC, amounts treated as wrongful distributions under state law, sales taxes not remitted. All right. Let's see. Um, see also transactions under which the member received an improper personal benefit, violations of criminal laws, malpractice claims in states that permit professional LLCs, including negligence and misconduct by another person under the professional's direct supervision and control. All right. Any other liabilities to the extent provided in the Articles of Organization. Okay, so I'm going to briefly talk about the applicability of piercing the corporate veil doctrine. Okay, so the applicability of piercing the corporate veil doctrine, including following piercing cases and reverse piercing cases, will be discussed in one of my later videos. Okay, but again, as I mentioned earlier, piercing the veil is something that can definitely happen. Just because you form an LLC does not mean that you automatically have limited liability. If something goes awry, if you happen to get sued, if somebody win a big judgment against you, those lawyers are going to come after you Trust me. And if there is one small error in your company's business, if you paid a bill from your personal credit card and you paid a company bill and you didn't write it out as a loan to your business and you don't have all of that documented showing that you loaned the company money and that the company paid you back, etc., then that right there is enough to show that you violated the alter ego doctrine, and they can pierce your veil and they can hold you responsible. And these lawyers are very scrupulous. They don't care. They will take you down through the ringer and do everything they can to seize your assets. All right, which is why you should have multiple layers of protection for your LLC. And that's something for another discussion as well. Those are services that I offer courses in. If you do want to know how to add multiple layers to your LLC, I don't have a course that's out there right now, but you could DM me, you could send me an inbox, phone call, text message, whatever, and we could talk about that. All right. Now, I'm gonna briefly touch on the differences between partnerships and LLCs. Okay. There are several differences between the liability of members in an LLC and that of partners in a partnership. Now, in a general partnership, all partners are liable. In a limited partnership, the general partner is liable. In an LLC, none of the members are liable. The Treasury Department at one time believed that an LLC could not be taxed as a partnership unless at least one member was personally liable, as in a limited partnership. The Treasury Department later determined that an LLC could be taxed as a partnership even though no member was personally liable. Now, the current IRS classification regulations do not consider the liability of members in determining classification except for foreign LLCs. Another difference between LLCs and partnerships concerns participation in management. Limited partners are liable if they participate in the management of the partnership, subject to certain exceptions under state law. LLC members are not liable if they participate in management or become designated managers. All right. Now, the last couple of things I'm going to talk about restrictions on transfer and withdrawal of members, and we're going to go ahead and wrap this one up for today. Okay. An LLC membership involves two basic rights. Okay. The first is a right to receive a share of profits, gain, and other compensation from the LLC. This is referred to as the member's economic interest. Generally, this right is freely transferable unless otherwise provided in the operating agreement. The second membership right is a right to vote and participate in management. This right is not freely transferable. State law provides that this right may not be transferred without the consent of a majority or all of the other members or as otherwise provided in the LLC agreements. The state laws were adopted at a time when the IRS regulations required restrictions on transfer in order for the LLC to be classified as a partnership. Now, the current IRS regulations on entity classification no longer require restrictions on transfer. All right, and last for the evening, we're going to talk about withdrawal of members. Now, the articles of organization, or basically how to exit the LLC. All right, so the articles of organization or operating agreement may specify the terms and conditions for a member's withdrawal. In some states, a member has a right to withdraw from the LLC and receive the fair market value of his membership interests unless otherwise provided in the operating agreement. Other states require at least 6 months' notice of withdrawal. A member is ordinarily entitled to receive only cash upon withdrawal, even though he has contributed property to the LLC. No member can be compelled to accept a distribution of any asset in kind in lieu of a proportionate distribution of money made to other members. All right, we're gonna wrap it up for tonight with that one. It's a lot of fire information in this video. You should listen to it again, go back, grab your pen, paper, take notes. Very, very valuable information. Each video will be in succession, so I can't say tomorrow. It may be tomorrow, it may be the next day, but within the next 24 to 48 hours, I'm gonna drop another video with more fire content. Be sure to like the video, thumbs up the video, hit that bell. First subscribe, hit the notification bell so you'll be notified when I post videos or when I go live. I'll start going live soon. Um, Also, go follow me on my other social media platforms, Instagram, Facebook, Ernest Banks, Pickup Game University. Um, and again, man, I appreciate you guys. I appreciate y'all for listening. Say, I'm trying to get this right, man. I'm gonna be listening to some of these other cats, so I could kind of follow the YouTube etiquette on how things are done because we really do need this information. I'm gonna probably do a little video, an intro, and all of that kind of stuff. But first and foremost, the main thing, because I'm solo dolo, so the main thing is really me just getting this information out there to you guys. I get it out there to you, it starts circulating, it get hot. Then maybe I could be able to go in and re-edit the videos and do some more important, enticing things to keep you guys interested, okay? That's my main goal. But until then, love, peace, and hair grease. Not this time.